Hi everyone. Just before we start, just trying to do a quick test. Hi Anushka. Hi Dr. Roshan. Can you hear me?
Yes, Vimanga, can hear you. Hi.
Hi Vimanga, hi
Okay,
Roshan,
super.
and good
Hi,
evening,
Anush.
everyone.
Thank you very much. Thank you very much for joining us, and also for all our viewers who are joining the space. Thank you very much for joining us. So just let me quickly start by giving a basic introduction and also just outline the kind of conversation that we want to have today. So I think we're all aware of the kind of economic crisis that we are presently going through. I think what is common is that in most of these debt crises that we've seen across the world, we see a lot of similarities that we see in Sri Lanka, and I think it would be right to call it more of a vicious cycle. Where most countries have gone through a debt crisis like what we are going through, and then and these crises have transitioned to a political crisis, and vicious cycle has gone on. So I think if you look at the situation in Lebanon since their early default in March 2020, they've had about three prime ministers. The situation in Greece with their debt crisis, which started in 2011, I mean, they've had about seven prime ministers. So yesterday we had our first. So I think at this context, it is through this context that we are trying to understand our framework for economic recovery. And I think the purpose of today's discussion with Dr. Roshan and Anushka is to really understand what a suitable framework for economic recovery is going to be, and more importantly, why we need a consensus-driven strategy for such a framework of economic recovery. So, not taking any longer, I very warmly welcome Dr. Roshan Perera, who is a senior economist and also a research fellow at the Advocata Institute, and of course, Anushka Wijesinha, economist and co founder of the Center for Smart Futures. And I invite all of you to also join us in this discussion. You can, as we go along, you can send me a request, and then I will enable for you to speak and raise and bring out your questions. Uh, One more message I think I must inform our audience that Dr. Roshan Perera worked with the Advocata Institute developing a framework for economic recovery last September. And I think through the course of this conversation, we will go back and forth into some of those recommendations and ideas that the document looked at. And Anushka worked group of young economists, and they've also and released an emergency plan for macroeconomic stabilization. So we will try to extrapolate through these documents and through these ideas and figure out what this common framework for economic recovery is going to be. So Dr. Roshan, Anushka, just to start this conversation, uh, shall we just look at shall we try to extrapolate the magnitude of the present crisis and why you think there should be a framework for economic recovery? Dr. Roshan, would you like to start the conversation?
Yes, sure, Vimanga. Yeah, so it's actually, thank you for inviting me to be on this program, and hi to everybody out there. I think before we can look at what the economic framework or what framework would be for economic recovery, we first need to understand the problem. I think we all kind of have some idea of the problem, but maybe everybody doesn't know the magnitude of the problem. So if you look at all our macroeconomic indicators, we find that from the real sector, looking at growth and inflation, we know growth was negative in 2020. We had from that low base, we had sort of a marginal growth, or 4%, nearly 4% growth, 2021, but that's off a low base. The projections are that this year growth is going to peter out a little bit this year, and we know from many reasons that with notwithstanding all the things that have happened, we might have a little bit of growth. But so that's from the real sector, and also inflation. Inflation, we are seeing sort of the highest inflation we've seen since the end of the war period in 2008. Inflation is at very, very high levels. And I think we're all aware of the reasons for this high inflation. and it doesn't look like it's going to come down anytime soon, despite the macroeconomic stabilization measures or the hike of interest rates that was recently done. Inflation is going to remain at this level for a while. So that is the other macroeconomic challenge. Apart from that, of course, when you look at sort of the root cause of this whole the macro stabilization problem, we know from our historical analysis that the problem remains from our fiscal deficits that we have been running from pretty much from the time of our independence, and that has really been the root cause of all the instability that we have experienced since then. So the last 2 years, particularly, it has been exacerbated due to many factors. We had a tax cuts in 2019 with no expenditure, commensurate changes in expenditure, which has sort of the fiscal deficits have ballooned to double-digit levels. The last we saw that kind of fiscal deficit was again towards the end of the war, and in 2001 when there was a sort of a global recession. So you can see that in that situation as well, we are in a very bad position. Then stemming from the fiscal deficit and the fiscal position, we have had, because of the huge demand pressures really coming from the fiscal side, that excess demand has been shifted to demand for imports, which has and because we have had certain issues with the external sector, particularly in terms of our receipts inflows, we've had this huge ballooning of our current account deficit in the external sector, and as a result, a huge imbalance in the external sector, which has had put pressure on our exchange rate. So you can see from all fronts, we have been affected, which is really the situation that we're in. And the next question then is, how do we get out of it? But I will take it on from there in the next part of the session. Thank you.
Thank you, Dr. Roshan. Anushka?
Thanks, Vimanga. Can you hear me well?
Yes, we can.
Great. So hi, everyone. Good evening. Thanks for joining all of us. It's a real pleasure to share some thoughts. I would say thanks for sparing time on a Friday evening, but I guess we don't really have much else we could do given that there's curfew. So thanks for looking into hearing some of our ideas. Vimanga, you asked about the magnitude of the problem, and I think Roshan covered a whole bunch of it already. But I think a couple of the additional points I'd like to make is, when we think of the magnitude, we also need to consider two groups of economic actors who are facing this magnitude and the potential likely lasting impacts. One is households and the other is firms. A lot of households have been taken to the brink of despair as a result of the current economic crisis. Roshan outlined several features of that, including the high cost of living, and this, being taken to the brink, comes also on the back of 2-3 years of facing the COVID-19 effects as well. So when we think of the magnitude of the problem, thinking of the magnitude of the impacts on households, particularly the urban poor, and the urban poor is not just in the Western province, but in other areas as well, where managing the cost of living is harder, given that there is very little opportunity to kind of self-grow, self-sufficiency and grow things. So the magnitude of the problem facing households is something we have to consider. The second aspect is firms. And again, given that firms have been pushed to the brink, Easter Sunday attacks and the current economic crisis, Roshan outlined several features of that, including the high cost of living. And this, being taken to the brink, comes also on the back of 2-3 3 years of facing the COVID-19 effects as well. So when we think of the magnitude of the problem, thinking of the magnitude of the impacts on households, particularly the urban poor, and the urban poor is not just in the Western province, but in other areas as well, where managing the cost of living is harder, given that there is very little opportunity to kind of self-grow, self-sufficiency and grow things. So the magnitude of the problem facing households is something we have to consider. The second aspect is firms. And again, given that firms have been pushed to the brink, Easter Sunday attacks and the economic fallout of that, COVID-19 pandemic and the fallout of that, and now the economic crisis, the best operating firm would be able to take one or maybe two of those shocks, but three all happening in such quick succession is extremely problematic for firms. So the magnitude of impacts on households and firms we really need to consider. And if you think of two other aspects relating to this whole idea of the magnitude, one is this concept of scarring. So you think about when you were last on a bicycle and you had a cycling accident and you had a really bad fall and you had a cut. The skin goes back, but you have some serious scarring that might last a while. This is analogous to how firms and households would face scarring that would last for a long time, and that scarring then means, essentially because you've taken them to the brink, it means that even in an upswing, however small that upswing would be, it makes it so much harder for households and firms to take advantage of that, because you've kind of depleted your savings, you have into debt, you have productive capacity in your business, your health and nutrition and education in your household. All things have been so severely affected. And we have to also, when we think of magnitude, it's not just the magnitude of this impact today, but potential aftershocks. And it's quite possible that in an economy that has been taken brink, it becomes very vulnerable to potential aftershocks, particularly those that are out of our control, external conditions, further oil price rises, a conflict breaking out somewhere that affects supply chains, our export markets, or commodity prices. We become much more vulnerable to these aftershocks. So I'll stop here, and just to reiterate that point about the magnitude of the problem, it's not just at the level of the macroeconomy and those indicators, but also taking it down to the household and firm level. We are seeing a severe stress that causes scarring that, while we do talk about the potential for these credit lines and other short-term facilities to manage the immediate needs, the recovery is going to be determined by how much scarring has already happened.
Thank you, Anushka. I think taking the conversation forward, something that you highlighted most I would say most significantly is this impact on households and firms, both at the immediate level and then medium and long term. So looking forward from here, and trying to draw up a path towards recovery. Where do we start, and what are those both medium and short term uh, uh, policy solutions that can divert us towards a recovery and also help these households and firms either to survive through this turbulence. I mean that's just a thought on my end. Dr. Roshan, would you like to jump in on the conversation?
Yes, Vimanga. So basically, I think what I spoke about the macro level, issues. I didn't actually go into all of it because we also need to something I missed was actually we need to look at the global environment, because we can see in the global environment how policies are. I mean, inflation is rising globally, which means that central banks are tightening monetary policy, which has impacts for countries like Sri Lanka in terms of liquidity, dollar liquidity, as well as their economies also are going to face much more stress, particularly countries that are exposed to the Ukraine war, which is the Euro region, which has big impact on our exports. So those are things that I didn't discuss, and also, of course, the impact on inflation coming from imported inflation due to the fuel prices and food prices, which are feeding into our inflation, but will continue to as long as prices remain elevated. But going to the sort of, so what next? How can we address these issues? So I'd like to look at it really from three areas. First, of course, we have to stabilize the macroeconomy, and I think that is the focus that has been given in terms of from the central bank, in terms of raising interest rates to address the inflation issue. We still know interest rates are still negative. Hopefully that is having some kind of impact on slowing down, or at least having some impact on inflation. But of course, we also need to address the fiscal. As I said, that is the root cause. And so far, we have not had any new fiscal measures being put in place. At the moment, we don't even have a cabinet and a parliament sitting, so it's very unlikely that we're going to have any of those fiscal measures being brought in immediately. But I think that is very necessary, because you can't have the central bank has been doing all the heavy lifting, as I said, interest rates, in allowing the exchange rate to float, but they can't do all the heavy lifting. The fiscal also needs to be adjusted. So you really need, and when I say the fiscal needs to be adjusted, it's in terms of revenue generation, because we know that the tax revenue has fallen to the lowest levels historically, and it's not warranted, or it's not justified really, because unlike in most countries, as the economy grows, tax revenue usually grows with economic activity. But in Sri Lanka, there is a negative correlation between economic activity and tax revenue. So basically, we have messed around much with our tax system, that in terms of the rates, the thresholds, exemptions, etc., we have completely eroded the tax base and also complicated the tax system. So that is one thing that has to be addressed quickly, and needs to be done very quickly. And this also will address to some extent what Anushka was saying about, there are some segments of the population who have really been extremely badly affected by are much worse off than others as a result of both the COVID as well as now this macroeconomic crisis that we are facing. So we really need to have increased taxes, particularly progressive taxes, so that those who can afford to, even in this current juncture, need to be paying more, so that we can support these vulnerable populations. So for that, I think the tax system has to be revised, and we have to try to raise, particularly from direct taxes, but also from the other taxes that have been completely destroyed. But apart from that, of course, the fiscal, from the revenue side, we also need to have some kind of expenditure management in terms of, if you look at the composition of expenditure, if you look at total expenditure, Sri Lanka is not we don't spend as much as maybe other countries in terms of our GDP. But if you look at the composition of expenditure, there are a whole lot of inefficiencies, or the kind of expenditure that we the type of expenditure we have is not really building the productive capacity of the economy, or facilitating economic activity, because a huge amount goes for salaries and wages for this 1.4 million public sector that we have, which is, it's a bloated public sector. That needs to be addressed. We know about 1/3 goes on interest. Hopefully that will get addressed with this whole debt restructuring. And then we have only 1/3 everything else. So we really need to have some kind of a shift in expenditure. So that needs to be done. And apart from that, of course, we also need to bring in some kind of discipline in the fiscal, because as I said, the fiscal is the biggest issue And without that, we can't go forward. So we have to, have some checks and balances. We do have fiscal rules, but they are not, we don't abide by them, or they have not been, they're basically flaunted, and there's no accountability or no consequences if the government does not achieve those fiscal rules. So that needs to be more greater accountability, and also bringing in this, limiting the central bank's financing of the deficit. I mean, that was a huge problem that we saw in the recent past. So this strengthening the independence of the central bank, where they limit the monetary financing of the fiscal deficit. I think these are some things that need to be brought in fairly soon to ensure greater macro stability. Apart from that, of course, my second point is on, but maybe I'll let Anushka take it on from there, and I can talk about the growth factors next. Thank you.
Yeah. So picking up from some of the things Roshan said, but I also want to step back for a minute to remind your question about what is the framework for economic recovery. And I think one of the first things that the government needs to do is identify very clearly and be very clear in their minds what are the underlying policy objectives, what is your policy goal, and being very clear about that. For instance, one clear policy goal right now in the short term is ensuring that we get sufficient foreign reserves and have the dollar liquidity needed for essential imports. That's an example of a policy objective. And then you have a whole bunch of things that you do around that in order to meet that policy goal. I would submit another policy goal or policy objective should be freeing up fiscal space in order to make sure vulnerable populations get the necessary welfare and relief to keep their head above water. And on that point, when you have a clear policy goal like that, then you mobilize your finance ministry officials, your budget department officials, your fiscal policy officials to figure out how do we free up that fiscal space. On one hand, as Roshan mentioned, the tax revenue side, what can be done quickly that potentially doesn't need to get bogged down in the mess that's in Parliament. Some of those tax measures cannot be taken while we can't bring some of these legislative reforms. But what are the other options on the tax revenue side? On the spending side, freeing up public spending. I think a good message has gone from the new secretary to all ministry secretaries saying you need to review all planned capex and cut that back. I think it's a good step, but we need a much more granular strategy for that. Secretary Finance could set up a task force to tell his budget team and fiscal policy team, I want you to go line by line with a fine-tooth comb and find places we can free up fiscal space in order to provide much needed relief measures to vulnerable populations. In identifying where to cut, I think we cannot afford to leave it to only a bunch of bureaucrats, mostly men, in Colombo 1, in those good officers of the Treasury. That cutting process necessarily has to be in consultation with those who understand the conditions on the ground, those who work with urban poor communities, those who understand the gender impacts, those who understand what's happening in rural and plantation sectors in order to identify what needs to be cut and what shouldn't be. Because I worry that there's a lot of discussion about providing relief to households, but if we are going to rely purely on the broken Samurdhi system, if we are going to reproduce some of the problematic ways in which COVID-19 relief, the 5,000 rupees was given, then we're not going to achieve that policy goal. I think, Skip, those were some of the policy goals for the short term. And my point was about needing to be very clear. I mean, I've worked in government and I know the limited bandwidth that there is in government. So thinking of, a very ambitious framework in the short term that has multiple elements is not going to be possible, particularly because it's compounded by this political crisis. So identifying 2 or 3 very clear policy goals and channeling all the energy towards that would be essential. In the more medium term, I think a policy goal would naturally be getting the economy ticking again, getting exports, export-oriented businesses going again, getting investment back in. And for that, I think we cannot do the kind of tinkering around of policies that we have in the past. So for me, some of the policies, this regime has been a regime of reversals, right? So many things introduced and reversed. And it was largely because there was a lot of tinkering that happened. And the image I have in my mind is that of a nuclear reactor, a nuclear power plant, where you, because of how complex it is, like the economy, you have a broad set of measures, of indicators and systems that have been preset because you know they work. Then there are other things that you watch the dials, you watch the indicators, you watch the temperature gauges, and you make adjustments from time to time with experts sitting in the control room. One day, the folks in the control room decided, you know what, we're going to just start turning all these knobs, all these dials, and see what happens. So we're turning a little knob over here, turning a little dial over there, pulling this lever here. Certain things that were, working fine, we decided to tinker around with it. Suddenly, this whole machine starts vibrating violently, starts hissing and puffing, and we take it to near explosion. We cannot afford to do that again. In the medium term, we have to stop thinking that tweak, an import control here, a few HS codes of licensing of imports here, control of a currency artificially there, introducing a tiny little minuscule micro intervention regulation here and there. That's not going to get us to the medium term policy goal of economic recovery and getting the economy ticking again. And I think now, given that there is much greater recognition among the public, among political parties, about the extent of the economic problems and the bad policies, we have a unique opportunity to do a bunch of reforms that we probably haven't been able to do before. And for that, having some consensus among the parties of what these reforms would be essential. Otherwise, there could easily be policy backsliding. And just to end on that point, on trade and investment, there's no way Sri Lanka is going to get the attention of the international business and investor community if we just do another round of tinkering of policies here and there to make things a little bit better. If we are to get any attention, this is after the short-term immediate stabilization, if we are going to get any attention and be seen as a country worthwhile doing business, then there are other things that you watch the dials, you watch the indicators, you watch the temperature gauges, and you make adjustments from time to time with experts sitting in the control room. One day, the folks in the control room decided, you know what, we're going to just start turning all these knobs, all these dials, and see what happens. So we're turning a little knob over here, turning a little dial over there, pulling this lever here. Certain things that were, working fine, we decided to tinker around with it. Suddenly, this whole machine starts vibrating violently, starts hissing and puffing, and we take it to near explosion. We cannot afford to do that again. In the medium term, we have to stop thinking that tweak, an import control here, a few HS codes of licensing of imports here, control of a currency artificially there, introducing a tiny little minuscule micro intervention regulation here and there. That's not going to get us to the medium term policy goal of economic recovery and getting the economy ticking again. And I think now, given that there is much greater recognition among the public, among political parties, about the extent of the economic problems and the bad policies, we have a unique opportunity to do a bunch of reforms that we probably haven't been able to do before. And for that, having some consensus among the parties of what these reforms would be essential. Otherwise, there could easily be policy backsliding. And just to end on that point, on trade and investment, there's no way Sri Lanka is going to get the attention of the international business and investor community if we just do another round of tinkering of policies here and there to make things a little bit better. If we are to get any attention, this is after the short-term immediate stabilization, if we are going to get any attention and be seen as a country worthwhile doing business, exciting, we need to do some big reforms. Deregulation of certain sectors, removing some of these import controls and para-tariffs in a phased manner, in a short phase manner, really looking at our trade and investment policies and, doing things that aren't just tinkering, because that's just going to make us get washed away in the crowd of all the exciting things other countries in our region are doing. So if we want to make a mark after the immediate stabilization and tell the world that we are open for business, our businesses are are ready, our country is ready to accept investment, we're going to have to do something exciting enough to get that attention.
Thank you, Anushka. I think we've broadly discussed the kind of we're seeing a recovery framework, coming into shape with both what Anushka and Dr. Roshan have been highlighting, and I think a lot of ideas, especially on the kind of identifying a policy objective for both the immediate and future, was highlighted by Anushka. So I'm getting a few requests, and I thought I'll enable our audience to also jump in on the conversation. Uh, we have, I think, Anura Fernando with a question. I've enabled Anura. You can raise your question. Aruna, you can state your question.
Sorry, I there was a lag. Sorry. Yeah, I think Anushka answered one question I had: how to identify a low-income household, whether it's going to be based on a Samudri system or something other than that. I believe that late Mangala Samadaveda was developing a program that would better identify. I think that's sorted. I guess if they are coming up with a new thing. Just another question. This is a technical point of view because I'm coming from corporate finance background. Now, in 2019, we saw that a sudden primary balance surplus in the budget was converted into a primary balance deficit by backtracking some of these expenses in 2020 to 2019. So, what do you think in terms of accounting standpoints and financial adaptability? How will the SOEs and the government will move forward now that we have some restructuring to do and identifying the pain points, and some of these restructuring require we identifying our liabilities and our asset bases prudently?
Yeah, so shall I take that, particularly on primary balance plus turning into deficit? I think that is, as you said, a technical point. It's based on the accounting treatment. And currently, Sri Lanka, basically, we follow the government, the IMF's government financial statistics manual, and we do our accounting on a cash basis, not on accrual basis. So really, we cannot differ or take expenditure that is done in another year. Sorry, in a particular year and put into another year. So really, that was some kind of change in the accounting treatment, which I think now they have adjusted. So if you look at the 2021, you don't see that adjustment being made. So hopefully that won't happen again. With regard to the SOEs, I think there again, actually, the focus really needs to be on a few of the big SOEs. Yes, we have like something like 400 SOEs or thereabouts. Nobody really knows the exact count, but we really need to focus on the few large SOEs because they're the ones who are really creating a drain on the economy. Economy in terms of the resources because of the fiscal drain, the banking sector because a lot of their debt is sitting on the bank in the banks, and also in terms of inefficiencies because a lot of these SOEs, what they produce, really go in as inputs into other industries. So for all those reasons, I think we really need to take a hold of the SOEs. And in terms of this reform program, that hopefully will get undertaken, because I mean, unless we do it now, we'll never do it. We really need to address these SOEs and put them right. So one of the things really is that we need to have cost reflective prices. We've already done some of it. It's had huge implications in terms of prices. But the thing is, somebody has to pay for it. What we have to realize is the costs of these subsidies or whatever we've been enjoying all this time is reflected somewhere in the economy in terms of higher borrowings, in terms of inefficiencies. So nobody has a free lunch. Really. There's nothing called a free lunch. So it's better to have them reflected in the prices and provide some kind of a cushion for the really the most vulnerable who will be affected by these price changes. And basically, what research and empirical evidence from many countries show that these subsidies really benefit those who really those who can actually afford to pay for these services. So there's really no reason to subsidize people who can already afford to pay for that. So I think SOE reform is one huge area, and that needs to be undertaken. It's not something that we like to do. I think this whole thing of reform, even the word reform was kind of a taboo word for many years. But I think that's where, using this current crisis, we really need to start educating the public about the need for reform. Because unless we do that, we'll be able to undertake these reforms at the pace at which we need to, if we want to turn around this economy quickly. And that, for that, I think it is up to all of us really to be educating people on why we need to have this reform. And just quoting from something that, and the thing is that what we should learn is, we should learn from our past and see what has not worked. I mean, we've tried some of these things over and over again, and it hasn't worked. In fact, we have gone further and further down a a rabbit hole, really. And look at the experience of countries that went into crises and really undertook very serious reforms, and how they turned around those economies. So, I mean, looking from the East Asian crisis, this is 25 years. This year is actually 25 years on from the East Asian crisis, and you can see how their economies, the resilience of their economies, as a result of the reforms they put in place post the crisis in the 97, 98. And so I think there are lessons for us to learn, and hopefully we will put in the reforms that are needed, so that we can also build the kind of buffers we need. We need the fiscal buffers, we need the external reserves to help us to withstand any shocks, because I mean, we can't be naive. We will likely face we'll face shocks. I mean, in the last few years, we've seen how quickly we've faced one shock after another, things that are totally unexpected. But in order to be able to withstand those, we need to build those buffers. So the only way to do that is, we need to take some pain now, so that we can build these. But to do that, we need to build the consensus and build the framework, or we have to have a mindset change, really, of what we really want to achieve through this, coming out of this crisis.
Thank you, Dr. Roshan. Anushka, would you like to jump in on the same question, or
No, maybe just a complimentary point there to what Roshan said. I do sometimes worry that we are overemphasizing the the this point about the emergency financing. Certainly not to take away from the fact that it is absolutely essential in order to bring the economy back from the brink of collapse, and help people and firms actually survive another day. But I think quite soon we have to start de-emphasizing that role, because that's going to happen. The emergency funding lines are hopefully going to come and do what they need to do. But I worry that in our usual complacent style, that we are going to think, okay, once that comes in, that's all we need. The recovery is the rest of the recovery is automatically going to kick in, and it's not. As Roshan pointed out, we have to do the fiscal reforms. We have to do the SOE reforms. As I mentioned earlier, we have to do the trade and investment reforms. Otherwise, we'll be alive. The economy will be alive, but barely, and we'll just be kind of a zombie economy, if you will. So I think we have to be very mindful that we don't overemphasize the role of this emergency financing in a medium-term sustained recovery. It is absolutely important now in the short term, but I think all of us need to understand that will have a particular role to play in the short term, and beyond that, we have to do all the other tough stuff in order to get growth going beyond it.
Thank you, Anushka. I have another request from Lalin. So let me let me. I've enabled. I've enabled you to. You can take up your question. Hi, Lalit. You can raise your question.
Hi, thanks. Just a question about a specific state-owned enterprise, Sri Lankan Airlines. How much of that debt is guaranteed by the government, or are we lucky in that none of it is?
I would think most of the debt is guaranteed. Particularly, I mean, it's a limited liability company, and it's not a going concern basically because it has a huge uh, debt on its balance sheet, which means that basically the government gives an undertaking that any liabilities will be sort of underwritten. It underwrites the operations of Sri Lankan Airlines because otherwise it is not a going concern. But speaking specifically on debt, their foreign debt, particularly in terms of their international sovereign bond, they have issued a sorry not sovereign international bond. Plus, they have borrowed from the banks, and I would think that most of them have guaranteed because otherwise there is no real. They don't really have any assets, really, right? To against which to borrow. So most of it would be government guaranteed. Anyway, there's always an implicit guarantee because it is 100% owned, or nearly 100% owned by the government.
Thank you, Dr. Roshan. I think if we had to take the conversation forward, I would like to take a cue from where you stopped before. And I think Anushka briefly touched on it, is in building support for reforms. So from what I understand now, we basically have identified a whole series of immediate solutions, and then under the framework of economic recovery, we've looked at more structural adjustments. I think what I think if I was to just change the conversation, what my understanding is that what the IMF will do is it will bring in some form of stabilization, but it will need a whole series of structural reforms to divert us towards a trajectory of economic growth. And I think there's been a lot of thought saying that that those structural reforms are going to be painful. So I think if we could briefly discuss what these structural reforms are and how are they divert our economy towards growth, because at least it is our perception that it is economic growth that can actually help Sri Lanka really come out of the crisis as a more agile economy. So I think we can probably jump into that conversation on structural reforms and growth. Anushka, would you like to take the cue from here?
Sure, Vimanga. I'll just point to a couple of aspects of that because it's a big question. Structural reforms is this big thing that has multiple aspects to it. I'll just pick up on two. One is the kind of the fiscal side, and the other is on the trade side. So on the fiscal side, what do we? I think we need to break down a little bit, or at least pause for a moment when we hear this idea that structural reforms will be painful. I don't think it's a foregone conclusion that all structural reforms are going to be painful. Structural reforms done in a bad way will definitely be. I know it might sound simplistic, but let me give you a concrete example. Fuel price adjustment. Bringing a fuel price formula, can be categorized under these structural reforms. Is that going to be painful? Well, if you structure the fuel pricing in a way that the categories of fuel that are used primarily by those who can afford it more, prices are higher, and those categories that are largely by the poor are priced differently, then that's one way of managing that vulnerability. And the other is, like many countries have done, Roshan also alluded to this, making sure you have well-functioning social safety nets and backstops on welfare that help the poor adjust. And I think we have to, my point on that is we have to get away from the idea that structural reforms will be painful, because that also feeds into political leaders and policymakers just going ahead with those structural reforms with less consideration to impacts on equity and impacts on welfare, because you've told them, oh, we know structural reforms are going to be painful, so so be it. We're ready for the pain. It makes it easier to not come out with innovative solutions to make them less painful, if that makes sense, right? On the trade side, just again on the fiscal side, I want to reiterate a point I made earlier about budget cuts. It's another part of structural reforms where you cut back on government spending. Does it have to be entirely painful? Not if you cut in the right places. We have a Ministry of Education and Ministry of Health annual budgets are roughly, I think, about 4% each, whereas defense is more than double that. We have a whole bunch of unproductive, inefficient projects that are started by politicians for various vanity reasons. There are capital expenditure projects that don't have good feasibility studies, good ROI calculations, sometimes even violating environmental impact assessments. So where you cut can make sure that the pain is less. And I would imagine there's plenty of space in the budget to start cutting in a way that you can make the pain less. I won't say there's no pain, but we shouldn't take this headline that structural reform necessarily equal pain for everyone and, at a general level. On trade, the other one example of structural reform I'll pick up would be, say, abolishing steadily para-tariffs. So para-tariffs have provided protection for certain Sri Lankan industries, and a structural reform around trade would necessarily mean that we have to bring that we have to rationalize our tariff structure, including cutting down and getting rid of para-tariffs. Now, when in around 2017 to 19, we came up with the trade adjustment program, which would have accompanied any tariff liberalization, where there is a systematic approach to figuring out, will people get hurt? So typically how it has before is when a government announces, we are going to cut these tariffs down, we're going to claw back the para-tariffs, industry lobbies go and meet the finance minister, meet the industry and trade minister, and say, give very alarmist messages. Oh, we have 10,000 workers in this sector. They're spread all over the country. In fact, we have been now just focusing on the domestic market. We have been exporting. Handful of firms go and give these alarmist messages, and that really scares a politician. And so they backtrack on the planned liberalization. Under the trade adjustment program, the government would already have, there would be a trade adjustment commission, and there was, a secretariat that had just been set up. The government would know for each industry category, how many workers are there? What's the gender impacts? Where are they located? So the geographic impacts. What has their performance been in terms of production, in terms of expansion, and in terms of exports during the time they were under para protection? Did they perform? So it totally changes the dynamic when they come and try to lobby. You just show this analysis to them and say, well, what you're saying is actually not true, because in the last 10 years you were 3 business firms in the sector, you're still 3 firms. You had 5,000 employees across all 3 firms. You're actually now 3,500 employees. You haven't grown. You say that you actually have become more export-oriented. Actually, that's not true. Your exports haven't increased. You've actually become more focused on the domestic market. So the government side, it totally changes the dynamic on being able to roll this out. At the same time, you would also have the evidence for when a para-tariff has potentially increased domestic capacity. And then you can say, fine, we give you a leeway of 2 years. We are going to phase the para-tariff removal out over about 2 years. So again, this idea that it's going to cause pain, that trade reform, tariff liberalization will pain, this structural reform will cause pain, doesn't have to be that if you do it properly. And these are not, some voodoo techniques. A lot of this exists out there. Some of it was already instituted in government. We started some of these things. So it's quite easy to pick these up and do. Let's not always think of this headline that structural reforms have to be completely and absolutely painful. They don't.
Thank you, Anushka. Dr. Roshan, your thoughts?
Yeah, so, okay, let me just add a little bit to that. So in terms of, I said there were several pillars on which reform agenda has to focus on. So I think we talked a lot on the stabilization. But just moving on from there to what to add to what Anush talked about on the structural reforms, I think we have to understand that the fundamental objective of our policy is basically to raise living standards or to improve the well-being of all citizens. So in that, with that objective in mind, basically how do we promote growth, or how do we unleash this growth potential in the economy? So growth should be really inclusive, that is, it should be broad based and benefit a wider group of people. It should be sustainable, that is, it should be growth over a longer period of time, and it should be stable, that is, it should not lead to macroeconomic instability or volatility. Now, when you look at the growth performance in Sri Lanka, you find that it has been very volatile. We have had short periods of high growth spurt, but those have been short-lived because it was based on a few factors really. One is we have this tendency of having very high expenditure just before elections. We've got this spending on projects, programs to raise growth, but it's very short term. It doesn't have a long term impact, and there is no medium term growth. So that fizzles out very quickly, and it also ends up leading to
export oriented. Actually, that's not true. Your exports haven't increased. You actually become more focused on the domestic market. So the government, it totally changes the dynamic on being able to roll this out. At the same time, you would also have the evidence for when a tariff has potentially increased domestic capacity, and then you can say, fine, we give you a leeway of 2 years. We are going to phase the tariff removal out over about 2 years. So again, this idea that it's going to cause pain, that trade reform, tariff liberalization will pain, this structural reform will cause pain, doesn't have to be that if you do it properly. And these are not, some voodoo techniques. A lot of this exists out there. Some of it was already instituted in government. We started some of these things. So it's quite easy to pick these up and do. Let's not always think of this headline that structural reforms have to be completely and absolutely painful. They don't.
Thank you, Anushka. Dr. Roshan, your thoughts?
Yeah, so okay, let me just add a little bit to that. So in terms of, I said there were several pillars on which we reform agenda has to focus on. So I think we talked a lot on the stabilization, but just moving on from there to what to add to what Anush talked about on the structural reforms, I think we have to understand that the fundamental objective of our policy is basically to raise living standards or to improve the well-being of all citizens. So in that, with that objective in mind, basically how do we promote growth, or how do we unleash this growth potential in the economy? So growth should be really inclusive, that is, it should be broad based and benefit a wider group of people. It should be sustainable, that is, it should be growth over a longer period of time, and it should be stable, that is, it should not lead to macroeconomic instability or volatility. Now, when you look at the growth performance in Sri Lanka, you find that it has been very volatile. We have had short periods of high growth spurt, but those have been short-lived because it was based on a few factors really. One is we have this tendency of having very high expenditure just before elections. We've got this spending on projects, programs, short-lived because it was based on a few factors really. One is we have this tendency of having very high expenditure just before elections. We've got this spending on projects, programs to raise growth, but it's very short term. It doesn't have a long term impact, and there is no medium term growth. So that fizzles out very quickly, and it also ends up leading to this fiscal deficit and the widening of our fiscal deficit, and then macroeconomic stability. So if you look at we know we've been in so many IMF programs, and it's a cyclical process, and you can see at what point we have gone into these IMF programs. It's partly due to this. The second one is the post-Civil War period. We had this very debt-driven infrastructure spending-led growth, which is one of the reasons we have this unsustainable external debt levels that we're facing. So we had this huge growth, but again, it fizzled out. because unless you could sustain that huge spending on infrastructure, the growth, it was not you didn't really increase the productive capacity of the economy. And the other thing is, it was basically an economy that was the sectors of the economy that you kind of expanded were in the non-tradable sectors, construction, real estate, trading, financial services, which once you realize that once the economy starts overheating, immediately whatever policy measures you take would shrink those sectors. But what we really need, and I think Anushka has alluded to this in terms of this trade reform, we need to expand the tradable sector in the economy, which for many years we've actually all our policies have been sort of have been detrimental to trade, because we are a country with only a 22 million population with a per capita income of less than $4,000. So we cannot follow a closed economy model. We've tried that in the 60s and 70s, and it was a failure. And most countries in the world that have tried it have actually moved on. But Sri Lanka seems to keep going back to this model and thinking that we can, by protecting trade, and I think Anushka alluded to this or spoke about this really, in terms of this trade protection. Uh, it is not going to serve a country like Sri Lanka in the long term, because we cannot grow through protecting our trade. So we really have to move out of that mindset. So what then do we need to do? We need to have a kind of economic growth that creates jobs, because and creates productive jobs. Because if you look at the high productivity jobs, if you look at the composition of GDP and a labor force, you'll find that the labor force still, about nearly 30% of the labor force is still engaged in agricultural labor. But the share of GDP, which has fallen to 7%, and that is natural. As the economy grows, that should decline. But you still have, 1/3 of your labor force is still engaged in agriculture, which is unproductive, which has, so many high risk, because it's affected by so many risks. How do you shift this labor? You need to shift this labor from these unproductive sectors to more productive sectors. But to do that, the rest of the economy has to grow, and the only way you can do that is by producing for abroad. And I'm only not talking about manufacturing, but it can be also services. We have this IT sector, but that has to expand. We have to think bigger. We have to start looking globally and competing globally. That's one. The other one is also we need to, but to do that, we also will need to have, the next generation of labor, the skills which will be required are completely different. So, I know we've been talking about this for decades, but we really need to invest in skills which will benefit the next generation of jobs that are going to be created, jobs that we don't even know will exist in the next 5 years. We need to create the kind of skills in this generation to be future ready for those jobs. So that is something that we really need to think about and start investing in. The other one is the informality. We have a huge informal sector. Again, particularly when you look at what happened to COVID, and now, when you have lockdowns, you have curfews, a huge segment of the economy is affected by, they don't have a cushion or a safety net, because they basically depend on their daily wage. So how do we move this labor force from this informal sector into a more into the formal sector? And I think there we need to address the labor laws. Again, we've spoken about this for years, but we have to take this on head on. And if we don't do these reforms, I know Anushka talked about some other reforms as well, but these are some of the hard reforms that need to be taken. Because if we don't do this, we have to be prepared for a mass exodus of people. Because if they can't find good quality jobs, high quality jobs with a living wage, basically going to go to another country, and we're seeing that, right? Mass exodus. And finally, the country will lose when we want to sort of get our growth moving. We won't have the people to do that. So I think these are some of the sort of reforms that, again, it needs a mindset change, that we're willing to undertake these reforms that we've talked about for many, many years, never done. But I think this is the opportunity to do that.
Thank you, Dr. Roshan. I think we've been speaking for about over an hour, and I'm still getting a lot of requests, so I will try to just entertain a few more questions. Uh, I have a request from Charit. Charit, you can raise your question. Charit, you can ask your question. Uh, Charit, you can raise your question. I've enabled you as a speaker.
I think he's on mute, from what I can see on the screen.
Charit, you're on mute. If you could unmute and take up your question. Uh, until Charit fixes his technical, I'm going to invite Mr. Udara Pires. You've also raised the question. I've enabled you to speak.
Hi, everyone. So, thank you for the very enlightening discussion. I guess my comment is a continuation of what Anushka and Roshan have been discussing, but from the point of view of the short term. So, if you think about the IMF programs that we'll be facing and the fiscal consolidation, this is going to cut government spending as well as government fixed capital formation, government investment. So, if you naively just look at the national accounts, this is going to drop a few percentage points of GDP. And the question is, how can the private sector plug this gap through private investment? I'm talking about the next 6 to 12 months. What areas, and are there any short term policies that you have in mind that could help to plug this gap? Because the alternative is that GDP will just mechanically drop by 3 to 5%. And, that's either got to come out of consumption or it's got to increase the debt level. So to me, it seems that we need to really start to think about how the private sector can pick up the slack that's left by public sector investment and spending. Thank you.
Um,
Yeah.
Dr.
Okay. Yeah. So that's an excellent question, and I think that's where what my concern as well in the previous thing was basically we'll have all this stabilization, which is all obviously going to have a negative impact on growth. Uh, how do we boost the economic growth given the stabilization program? And I think that's where the structural reforms come in. But it's not just structural reforms for it as an end itself. I think it's um, we need to be able to attract uh, investment, and basically it's foreign investment, because if you look at our savings, our domestic savings is or even our national domestic savings is way below the level of savings that the level of investment we require to generate a growth of 7-8% that we are looking at. So to be able to bridge that deficit, which we've tried to do through borrowing, which has failed, and that is not a sustainable policy. We really need to be able to attract investment. And I think that's to do that. I think this is where the structural reforms come in, because in order to do that, you've got to say we are open for business. We really we are going to create an environment which is conducive for business. So basically, improving this whole doing business environment is, I think, crucial in that regard, and that is not going to come from IMF program. It is basically something that we will have to do in terms of the structural reforms we were talking about. So one unlocking the land supply in this country. I think that this has been identified as one of the biggest one of the hindrances to investment. So we need to address these. The other one is I was talking about the labor laws. We without addressing the labor laws, it's going to be very difficult to attract
Sorry, everyone. I think we had a technical issue on our end, and the session dropped. Let's just I think we've let's just wait for Dr. Roshan to join, and then we can finish off the conversation. Until Dr. Roshan joins us, I have one more request. Anushka, you can go ahead.
Yeah, Vimanga, I just wanted to respond to Udara's question. I think it was a very valid one, given that in the last few years, all of the state in the economy has hugely expanded. So economic activity driven by, you know, state through various direct and indirect forms has been quite high, which means that once you pull that back, it kind of, the economy has kind of withdrawal effects, and you have that gap in economic. So while I don't have an answer to how to plug the 100%, but specifically on the private sector, I'd like to focus on an important part of that private sector. What drives that private sector growth is the banking sector. And I think we have taken the banking sector also to the edge from the time of COVID to now. The burden of providing relief, given that the government didn't have fiscal space even through COVID, was largely passed on to the banking sector. Now, that means that even if you have interested private sector, ready private sector to pick up some of that slack, go and invest, expand some capacity across Sri Lanka, then they're going to come up against funding constraints, because the banks are going to be quite risk averse in this moment. So I think that's something that we could potentially fix, where as part of these discussions with multilaterals, we need to look at coming out with some kind of an emergency or a kind of particular funding windows that banks can tap into in order to finance growth, in order to finance private sector activity. Already we're seeing somewhat concessional windows, not at interest rates of the current market rates of 25%. So I think I haven't given enough thought to how that should be structured, but in principle, some kind of financing windows through the banking sector that provide credit for businesses to expand, not for regular consumption kind of loans, but for specific economic activity. Could be regions. I don't think we can agree today on what the contours of that would be, but my point is about adequately looking at the role of the financial sector, the banking sector, in financing private sector who would be interested in picking up that slack. And I know already of businesses, even through this crisis, who saw plenty of opportunity across Sri Lanka to expand productive capacity, to expand some of their exports, but the inability to get credit, and the fact that banks didn't have that credit, the risk appetite has completely changed right now. That is something we could potentially address with some specialized windows. And I'm certainly under no illusions that's going to entirely help plug the output gap that will come with the government pullback. But I think it'll go some ways addressing that.
Thank you, Anushka. I think just to bring things into context, we were responding to a question, and I think been dropped while Dr. Roshan was speaking. Dr. Roshan, would you like to just summarize what your response was, and then we can quickly jump into the latter half of the conversation?
Yeah. So basically, what I was saying is, I think in answer to that question, how do we stimulate private investment? I think the only way, given that we have low domestic savings compared to our investment requirement, we really need to be able to attract foreign direct investment. And to do that, I sort of alluded to a few things that we would need to do to improve our doing business environment, really, and our competitiveness, global competitiveness. One thing I didn't say before I got locked out is basically we also need to think about the human capital element. And I think I talked about it earlier as I talked about how we need to shift labor. We really need to see how do we develop the kind of human capital that would attract companies here. So for that, basically we have to address from our primary, secondary education to our tertiary education. How do we build the skills that are necessary, and the vocational training particularly, so that we have the kind of labor force that would attract this kind of foreign direct investment into the country. So I'll just stop there, and maybe we can take up some questions.
Thank you, Dr. Roshan.
Vimanga, do you mind if I just jump in for a quick 30 seconds on that? I think on the point about human capital, and if you bring it back to the context of what's happening today and the economic crisis, one of the big concerns I have is that we are going to see a regression of our human development indicators as a result of this crisis, coming also on the back of COVID-19. And when you hear so many instances of families unable to eat more than a meal a day, and that meal also not having proper nutrition, children having to skip meals, schools being closed during COVID and now during this crisis, about 1 million children actually get meals in school, so their nutrition gets supplemented by going to school and getting a meal. Education having been conducted online and all the inequalities that go around with that learning. I worry that we are going to see the human development impacts, the human capital quality impacts only in about 10, 15 years if we don't do something about it now. In terms of health, nutrition, and education, fundamental pillars of our human capital quality are going to be eroded, and we are going to only see it later when these children join the workforce. So again, to my point about scarring that I mentioned earlier, we really need to make sure that that's best.
Thank you, Anushka. I think we have space for just one more question, and thereafter we can entertain the concluding remarks. I think I have a request from Mr. Mohammed Arif. Sir, I have enabled you to speak. You can raise your. Mr. Mohammed, I've enabled you as a speaker. You can take up your question.
Yeah, thank you very much. I was just listening there briefly, and I just have two questions. And if there is no answer, that's fine. But my question is mostly on the stability of the banking sector in Sri Lanka. What is the exposure? I did see something very briefly about the exposure to ISBs. If there's a 60% haircut on this debt, what is the capital pressure that's going to be on the banks? So I know to start off in Sri Lanka, the banks were struggling to raise capital, the bare minimum capital levels. So what is the position on that? And the next question I have is, I did hear about FDIs, but my biggest fear is that there are going to be projects, since we're in a very desperate situation, that they're going to be forcing down projects, FDIs that are untendered. That will be both very, very disadvantageous for the country, and also, will not help our citizens in this difficult times, only increase poverty and deprivation that's going to come with it. So those are my questions. If somebody could just give me a briefing, that'll be great, especially on the capitalization of the banks, and if the Sri Lanka development bonds have to go to a 60% haircut. Thank you.
Yeah, so I'll take this on, but I don't know all your answers. But certainly the banks have some exposure. I think it's probably something in the magnitude of less than $2 billion out of the $12.5 billion. But I think that is the domestic, and most of it is on the banks, of course. So it all depends on how these negotiations play out in terms of the haircut that they would have to take. But you're right, it's not only that. The banks are also struggling with because of the moratoriums that have been in existence from the time of COVID. and we've just been sort of kicking the can down the road. That's something that will have to be addressed and addressed fairly soon in terms of how are we going to resolve this. Because and also the third one is of course the exposure to the SOEs. So I think these are some things that the banking will have to be addressed in the banking sector. So one of the things, of course, is I think Anushka alluded to that. We don't have a bankruptcy law. It needs to come in place, and the bank resolution mechanism that also needs to be in place. So these are some things that have to go in parallel to what's going on now, because if we hit a brick wall or if we hit a problem, these frameworks should be in place so that we can have a orderly we can address these issues in an orderly manner, and that it doesn't lead to another crisis. So I think because this is something that we can afford at this juncture to have any stress on the financial sector. So I think these are again another area of reform that we have neglected, that we have not done at the right time. But at least now I think these are some of the things that we need to put in place very quickly so that we can address these issues before they hit us. I know I have not exactly answered the question, but what I'm saying is we need to have these frameworks in place so that we don't have a sort of disorderly in the banking sector. The other one is in terms of the unsolicited projects that you're talking about. I think that is something, again, the frameworks are there. It's just a matter of them being utilized or being implemented. So within the government sector, within the private sector, whoever undertakes these particularly large infrastructure projects, all these frameworks are in place. It's a matter of actually implementing them to ensure that the projects that are undertaken have the maximum benefit to the country or give the maximum returns, really. And we weed out any kind of project which has minimal return or has a negative impact on the economy. I think we have seen the impact of that in terms of the current crisis, and the kind of projects that are these white elephant projects that have left us with this huge debt and with no real income generation. So I think that is something again that needs to be monitored, really. And I think that is up to our citizens to ensure that we have ensure that these checks and balances are put in place, that we don't go back into this system where the projects that are unviable are approved.
So, Mohammed, to answer your question on those two, on the first one on banks, I'm not going to comment on the capitalization and stability, given that I have a role in the financial services industry, and it wouldn't be proper for me to comment. But what I would say on some of the challenges that the ISB debt standstill, among other instruments, the ISB debt standstill, and also currently what's happening with the SLDBs, where the central bank has asked all banks to roll over their SLDBs that they would not be paying up at maturity, brings a huge US dollar liquidity problem for the banks in an already stressed USD liquidity environment. So I think that would be one of the short-term things to look out for, because those maturing bonds, those maturing SLDBs are factored into the bank's cash flow forecast, USD liquidity forecast. So now suddenly, now that those are not coming in, really affects USD liquidity, and ultimately it affects businesses, manufacturing businesses, importers, and so on. So I think that is what will need to be bridged quite quickly. On the second point, I think when you asked about FDI, I wanted to draw, I want to make a distinction between FDI, which is pure private sector projects coming to Sri Lanka with no debt, and some of the others which are taken on with loans and there's foreign participation, saying infrastructure, which the government bids out. I'll focus on the former, which is the FDI. And my concern on FDI now is that given we have a weak operating environment to attract good FDI, there's a chance that in desperation, Sri Lanka will chase after bad FDI. And there are at least two parts of that quote unquote bad FDI that we need to guard against. One aspect is FDI that's going to take a slash and burn kind of approach on the environment. We can't afford that just because we have a shortage on our reserves. Yes, FDI brings in sustainable foreign reserves, but we can't afford to just permit any project that will come here and destroy the environment. The second aspect of FDI in a difficult operating environment is that there's a tendency to grant excessive fiscal concessions. For example, through the Strategic Development Projects Act, which gives a lot of discretion for the kind of concessions that can be given. We've already seen in the last couple of years several projects, from a software outsourcing operation to a hotel on Gaul Road, get Strategic Development Project Act status. And there's a lot of discussion on deciding what is a strategic project and what is not. I have interacted with investors, international investors in many key markets, and I can tell you that tax incentives are very low down on the list of demands of good investors. But of course, when something like the SDP Act is on offer and you know you can get something out of it, which investor wouldn't want to apply for? And when in the previous IMF program, there was an agreement with the government to halt granting concessions for FDI under the SDP Act. While this initially caused alarm among investment authorities in government that, gosh, investors won't come, we're not offering this anymore. The fact is that it strengthened the hand of the investment facilitators, the ministry officials who would discuss with investors, because first thing you set out on the table is, guys, I'm sorry, SDP is no longer being granted. We'll talk to you about other stuff, accelerated depreciation, some double allowances for any training and development you might do or R&D you might do. But I'm sorry, SDP Act and the ultra generous concessions under that is off the table because, hey, our hands are tied because we're under this IMF program. And that was really good because then you have a very different conversation with an investor. So those are the two call outs I would make about attracting FDI during a very difficult operating environment. We should all be vigilant. And I think the good news is that with all of what has happened in the last couple of months, ordinary citizens are much more vigilant. And I think it'll be harder to go down the route of bad projects. And ultimately, as Roshan said, we have institutions and laws that guard against this. We should allow those to operate. We should allow the right laws to continue to operate without interference. Committees appointed with ministers to so-called facilitate investment, I think should be avoided. Ministers don't know how to bring in investment. At least rely on some of the institutions that are supposed to govern that and let them do their job in the framework that they can do it, rather than politicians getting too involved in that facilitation process.
Thank you, Anushka. Thank you, Dr. Roshan. So, ladies and gentlemen, I think we've been speaking for over 1.5 hours now. And what we've been discussing is identifying a framework for economic recovery for Sri Lanka. And lots of ideas and lots of possible solutions have been discussed. So I think if we are to conclude today's session, I would invite Dr. Roshan and Anushka just to share their concluding remarks, and then we can end this session.
Okay. So just to end by saying, I think what I said earlier, we really our home behind really the huge reforms that they also faced a very similar economic policies on very old theories and old things that have really not worked in our country, not worked in other countries. Dawn, which is what I said earlier. So I think that is something that we really need to take on board, and we need to start educating the public on this, on transforming the economy in a way that will generate sustainable growth, because the kind of economy that we have currently is not doing that job, and we're not going to be able to pull people out of poverty, pull people, take people to the next level. So I think that is something, and I think it's on the part of all of us really. to educate the public, people who understand it, and particularly to be mindful that, or to educate the public that we will have to go through some pain. It's not going to be an easy road, but if you look at the medium to long term objectives, we need to take these hard actions or hard policy decisions in order to be able to get there. That's one. The other one is that, again, that the economic policies that we take cannot be driven in the interest of a few people. It must be broad based. As I said, economic growth has to be inclusive. It has to be broad based and not driven by the interests of a few. So when we exert policy or for policy makers to make the right choices, we must ensure that those policy choices are those that benefit the majority of people. So when we look at those tax cuts that were made, who finally benefited from those tax cuts? So we need to we need to analyze the choices or the decisions that are made and then put pressure on government, on the policymaker, to make the kind of policy choices that would have, that will benefit most, large number of people. And I think because we owe it not to, to the younger generation particularly, who are really out there, who have really voiced their frustrations and their concerns, and otherwise we're going to lose that entire generation if we don't make the changes that we need to make. So yeah, I'll end with that.
So Vimanga, I'll make 2 points. One is going back to where I started. This conversation is about a framework for economic recovery. And I think that framework should have some very clear, compelling policy objectives, not too many, some for the short term and some for the medium term. And I say that because there isn't a great deal of bandwidth in government at the best of times. These are stressed times, and the only way to get the most out of the public service, get the most out of private sector and other parts of society is going to be to clearly articulate, here are the policy goals we're going to chase after, our policy objectives in the next 3 months, 6 to 8 months, and 1 year, and get everybody focusing on achieving those. And I stated what some of those policy objectives would be. That could be others, but my point is about very, very clear handful of policy objectives that address the key needs. The second point is on consensus, political consensus. Over the next 6 to 12 months, one of the biggest risks in the Sri Lankan economy is political instability. I hope we will be able to prove all of the other examples of other countries that have gone through what we are currently going through wrong, and be a standout example where we didn't have multiple changes of every few months, but it's likely we might, or at least there'll be a lot of political tension. Now, in an environment where we have identified some clear policy goals, there's a lot on the line in terms of people and businesses surviving. We cannot afford to have political parties pulling in a whole bunch of directions and scuttling the recovery. So I think upfront, we have to have political parties getting together to agree on what I call a common minimum program for the economy. Yes, you may not agree on selling off SOEs, strategic SOEs, like say banks or utility companies, but can we agree on these other things for SOEs? Can we agree on selling off the stakes in so-called non-strategic? On the other parts of fiscal adjustment, let's agree on which aspects of tax we're going to increase, which parts of the budget we're going to cut, which aspects of trade we're going to liberalize and not, so that at least for a 1 to 2 year period, a broad set of economic recovery and reform areas have been agreed. And I don't want folks to think that this sounds fantasy. It's not, because countries have done it. Australia is probably the standout example of that, when many, many years ago, they brought labor, private sector, and government together, and opposition political parties, to chart out a set of economic reforms, because all of them were working towards a smarter, more competitive Australian economy. And I think that needs to happen now, because the biggest risk would be when some of these recovery measures are being rolled out, that parties go back to what they usually do, then narrow political compulsions and start pulling in directions. And this will hurt public confidence in the recovery process. I'm not saying there shouldn't be debate, but on a basic set, a common minimum program on some basic areas that everybody agrees needs to happen to bring the economy back from the brink. Thanks.
Thank you, Anushka. So, ladies and gentlemen, we've been going forward and over 1.5 hours. So, thank you very much for joining this session. And Anushka, Dr. Roshan, it was an absolute pleasure to host the both of you. I think a lot of ideas, a lot of policy solutions were proposed in our journey towards finding a framework for economic recovery. And I must remind you that a lot of what was discussed in terms of policy are basically outlined in the framework for economic recovery that Dr. Roshan worked on, and also on the emergency plan that Anushka and a group of other young economists have worked on. So you can look at these documents to further evaluate and understand the need, and also to build consensus and educate others on the need for a program of economic recovery. Uh, so thank you, ladies and gentlemen, and let me end this session on that thought, and also highlighting the urgency and importance of building consensus, support, and educating others on standing behind these reforms, and in our journey towards coming out of this severe economic crisis. Ladies and gentlemen, thanks again, and stay safe. And we'll join you again on next week on another Twitter Space session. Have a very pleasant evening. Thank you, Anushka. So, ladies and gentlemen, we've been going forward and over 1.5 hours. So, thank you very much for joining this session. And Anushka, Dr. Roshan, it was an absolute pleasure to host the both of you. I think a lot of ideas, a lot of policy solutions were proposed in our journey towards finding a framework for economic recovery. And I must remind you that a lot of what was discussed in terms of policy are basically outlined in the framework for economic recovery that Dr. Roshan worked on, and also on the emergency plan that Roshan worked on, and also on the emergency plan that Anushka and a group of other young economists have worked on. So you can look at these documents to further evaluate and understand the need, and also to build consensus and educate others on the need for a program of economic recovery. So thank you, ladies and gentlemen, and let me end this session on that thought, and also highlighting the urgency and the importance of building consensus, support, and educating others on standing behind these reforms, and in our journey towards coming out of this severe economic crisis. Ladies and gentlemen, thanks again, and stay safe. And we'll join you again on next week on another Twitter Space session. Have a very pleasant evening.